Good morning. No, sorry. Good afternoon, everyone. It's Jonathan Takadeni here for this week's edition, episode 92 of Bulls versus Bears from MPC Markets. Our unsung hero is out on his boat, the Golden Edition, enjoying the nice day on the Sydney Harbour today. Mark Gardner's out. And so we have Kai Chen.
Hello, hello. Good to be back.
Okay, yeah, nice welcome there, Kai. And so this is episode 92, and we have the Amazon bull on the cover. So the big news is that,
Immaculate bull, isn't he? There's very mythical and godly.
That's it. And it was all basically Amazon's killed it on the cloud. So I think, obviously everyone knows Amazon for, ordering heaps of shopping and getting it delivered nice and quick, but all of their profits and basically beats came off their cloud services. So it just looks like anything cloud related, AI related, basically anything compute related. That's where the big numbers are being won. So that's the Amazon bull there. So just looking at equities here. Been a fairly mixed week. So Nikkei is the standout there, up 6% for the week, or almost 6%. I do follow the Japanese market, a little. Not, I don't deep dive. I don't follow the individual stocks. But what's happened there is the president is a student of Abenomics, and basically. She wants loose monetary policy. So the Japanese yen is getting weaker, and the Nikkei is rising on the back of that because obviously, there's more money in the system, and obviously that's why it's leading the pack in terms of indices. But, it works if inflation is under control. And in terms of inflation, the big news was here in Australia. We had the CPI numbers come out on... Was it Wednesday, Kai?
Wednesday, yeah, and it was a pretty big miss on the upside against expectations. So they were expecting about 3.1%, came out 3.5% year on year. So that's quite a spectacular miss from expectation. So I really think the rate cuts, at least in Australia, are off the board. So yeah.
Yeah. So and then obviously we had the Fed cut this week as well. That was a hawkish cut. So basically, Powell just came out and said, we're going to give you this 25. You'll be lucky to get another 25, but, don't count on it either. And the market had already priced in that 25 cut, but they were pricing in 2 more cuts before the end of the year, and now that is off the table. So that's why there's, been, as I said, mixed markets all around. Obviously, with the ASX, that fell off from the record highs. It was chugging along near 9,100, and then the CPI figure came out, and we're back around the 8,900, 8,920 level today. The Dow, S&P, and NASDAQ, we had most of the Mag 7 reporting this week, and that's why it was actually higher for the week. But overall, very, very mixed markets. There's no... I wouldn't say there's a clear winner at the moment. I wouldn't say the Bulls are winning or the Bears are winning. And it's all very, very stock specific. So that's equities in general. Do you have any thoughts on any stocks you've been following this week at all, Kai?
Yeah, I mean, obviously in Amazon releasing this morning, again, just AI thematic keeps trucking on. Nothing can stop it, but I mean, it makes sense, right? Like we talked about many times, those infrastructure players are probably the safest bet at the moment. And obviously we've gone through some of the robotics in our structured products thematics. And I do think, and there's mentions of like quantum computing and all that, but I still think it's a bit too early, right? Where AI, it's the technology's come to maturity. So now, basically all these cloud infrastructure providers are doing incredibly well because there's just a massive amount of demand out there. And yeah, like the infrastructure guys are killing it.
Yeah, and one thing I did read, I mean, like, even though the US government might put money into quantum computing,
Mm.
they're like years away from even thinking coming out with something commercial, and so they're years away from anything that could be making money.
Oh,
Like
absolutely.
it's all very theoretical based. But one thing I did note is one of the beneficiaries is good old Big Blue, or is it Deep Blue? IBM.
Oh.
So if you have a look at their stock price, they had earnings this week. It actually dropped on the earnings, but then when the news on the quantum computers came out, it had a nice rally, and I think it's must be like 12-month highs for IBM. So I've got a mate that works there, and he actually helps them build data centers. And well done. I'll pat him on the back when I see him next.
Yeah, just to clarify with like quantum computing and the reason why I don't know, I think it's not ready yet, right? Like to put it simply, like classical computing, one zeros. This
Mhm.
thing is on a scale of 1 to 0. So it's a completely different system, right, compared to classical computers. And if you think about it, like there's nothing that's written for quantum computing. Any of the application and real world application that comes about it is so far off. It's maybe in 10 years' time it might be more commercially available. But yeah, I think now is probably not the right time.
Well, it could be. It's like a mining stock. So even
Mm.
though Trump came out and said, "Oh, we're going to do $1 billion deal with Australia because we love Australia,"
Mm.
and there's been a pretty much a big pump and dump. There is a trade there, but you know, as an example, Arafura was one of the biggest beneficiaries of that pump. I looked at it a week and a half ago. It was trading just above 20, and I think it got to a high of 58 cents on that news. But even though the government's funded them, I think it was 100 million that first round, and then another 200 million on this most current round. That mine's still like 5 or 6 years away from
Mm.
actually producing anything. So, yeah, it just shows you how far away or how long these projects do take to get hold. So, yeah, so same thing with quantum computing. Years down the way, but there are short-term pumps and dumps that are tradable, investable, questionable, tradable, yes. Okay, and so here's the heat map for the Nasdaq for the week. Now, one thing that you have to sort of factor in is that doesn't actually. I'm not too sure if it actually includes the post-market session. So, as an example, Amazon on the top right, up 1% for the week, but I'm pretty sure it's up something like 18% in the aftermarket. So that'll be a lot more greener come after tonight's trading. Meta got absolutely hit
Mm.
on their earnings. Netflix continues to make more lows. But overall for the week, even though they pulled back a bit overnight, AMD, Broadcom doing well, and the big stalwarts, Apple making new highs, Google making new highs, Microsoft not so much, and Nvidia. So even though there's been talks, who was it? Qualcomm came out with
Yes.
So Qualcomm came out with news that they're going to build GPUs. You said you looked at the specs. What were your thoughts there?
It's actually NPUs. So it's a little bit different to GPUs. GPUs are a bit more generic in their processing powers
Mm-hmm.
because they're used for gaming. Well, originally used for gaming, but they have a lot of quick compute. NPUs are very specific to AI and large language models and just in general neural networks calculations. So Qualcomm is basically going into that space, but the reason why it's kind of a big deal is because like with GPUs, they're very incredibly power hungry, whereas with Qualcomm, the way they're doing it, it's a lot more energy efficient, and they're releasing server chips, just to make the distinction. So it's not mobile chips, but they are for servers in data centers. they're much more energy efficient, and they might not be as powerful as some of the GPU clusters, but it's still it's definitely fits within a space.
Okay, interesting. But Nvidia's share price still made new highs. So
Of course.
so the Nvidia bulls are like, yeah, whatever, hold my beer. We're still going to buy more stock. So yeah, incredible on that front. Tesla's solid. Keeps chugging on. I think it's trading around that 440 area as well. But overall, it looks like I think the phrase is it's a K-shaped economy. One part's doing extremely well, and then there's other parts not doing so well. So, but the key with the indices is that all of the Mag 7 are doing extremely well. So that's what keeps the indices keeps the indices making new highs, because they're such a massive component of the index at the moment. So yeah, here we go. So that's the heat map. Oh, here we go. Who's that there? Those that are listening. Mark and I actually went to Jaggards and did a podcast with their CEO, Hercules Sutsouis. Hopefully I didn't butcher his name. Lovely gentleman. And it's a great interview, because the thing with physical gold is that, it's not the whole point of physical gold is that you're holding something real there. And to know that there's an actual person who's passionate about the gold market. There's a great history behind Jaggards, and you'll get some great service from an actual person that you wouldn't mind throwing some business to. So have a look out for that podcast there.
So JT, how much are you actually holding there in your hands?
Yeah, I was about to go through that. So that is 1 kilo of 99.99. Oh, sorry, is it? Yeah, either way, it's 4 nines purity gold, so just call it 100%. And in Australian dollars, that is roughly 200,000 Aussie in my hand. And
if it just 4x, you'd be holding $1 million in your hands.
Yeah, exactly. Well, look, it's actually 2x in the last 18 months, and that's actually kind of scary. So that's 1 kilo. Now, here's my story. I started buying physical gold, I forget the exact year, but I bought an ounce of sovereign coins for 1,000 Aussie. So 1 ounce of gold is worth 6,000 now. So I'd have to go back in the charts. But I remember it was maybe 2005 or 6, maybe 20 years ago now. But the thing with gold is that there's this phenomenon called gold fever. And what the legend says is that once you actually hold gold, you actually get a desire for it. And that's what gold fever is all about. Actual wars, countries, look, lots of people have fought and died just for this shiny metal. And it's got a very, very storied history, and that's all about what gold fever is. And I guess it's all about the density of it. Like if you hold, so that gold bar that I'm holding there, it's only about the size of an iPhone. So an iPhone's maybe, 300 grams, 400 grams? But that's a kilo. And when you hold it in your hand, it's that density, and it's that phenomenon that has driven the history of gold. And obviously it's got the elemental properties of being very, very corrosion-free. Like, there's been gold coins that have been recovered off the bottom of the ocean, and they're still intact, and that's why it's got that store of value, and it's got a very, very long history as well. So, the podcast for the Jaggards episode, I believe that should be coming out soon. I'm not too sure when we'll release it, but that's worth watching. And we actually do, and the reason why we had that podcast is that the whole point of the podcast is how do you buy physical gold, and that's the answer that gets answered there. And then obviously we just had a yarn with Hercules, a few gold stories, as well in there. So that's one to watch there. And so this is actually earnings. So you can just see United Health came out on Tuesday this week. Microsoft and Meta. So Microsoft miss, Meta miss, Apple beat, Amazon beat. They're the main moves for this week. And then if we go to what's coming for next week, yeah, a lot of. I mean, like these are still massive companies, but Palantir's a big one on the Monday. Look, defense company, AI, it should beat. Like if that doesn't beat, then then this market's in a bit of trouble. Oh, AMD on Tuesday. That's
Qualcomm on Wednesday as well.
so that'll be big. AppLovin, Robin Hood. Yeah, there's still some big companies. So that should be the like. Obviously, we had the Mag 7 this week in earnings, and then now we've got the rest of the market doing their bit for earnings. But yeah, still a lot of market moving data there. Oh, and look at that, U.S. government, no economic figures because they're still shut down. Will they ever go back to work there, Kai?
Oh, I don't know. Elon might have fired a bit too many. No, it's such a gimmick, Ruck. They will reopen it at some point. It always has. If they don't reopen, I think I'd buy gold. That's what I.
Well, no, just speaking of gold in terms of the spot price or the actual tradable futures, we had that magnificent run all the way up to call it 4,400, and then we backed off till 3,900, and then just overnight we're back above 4,000. So what I think happens to gold is that there was a period throughout the year, just this year, so it had a run from January to about April to September. It actually didn't do much. Like it was just hovering around in a couple 100-point range, around say the 3,300 level, and I think it was first or second week of September. It just started rising, and it put on $1,000 very quick. So the fact that it's retraced $500 of that, so 44 down to 39, for the fib guys out there, or for the traders. Sorry, I wouldn't call them traders. For the Fibonacci chartists out there, that's a nice retracement level. I don't know if that's a 31 or a 61.2. But either way, it's pulled back, and then now we're at 4,000. So my call is that we'll hover around this 4,000, anywhere from between 42 and 38 for the next few months, because there's just too much heat in the gold market at the moment. Having a chat with Hercules, what I kind of wanted to get an insight was, and hopefully I ask him the right questions, is that does it feel different this time? Because he's been through a few boom and bust cycles. And yeah, he kind of agreed. Yeah, he feels a little bit different this time, and that's kind of the sense that I get, because I've been holding and trading gold for a long time. I've been a long-term gold bug, but I've just noticed that there's just a lot more happening in the background that that should mean gold should head on higher. And obviously the number one reason is the amount of debt that the U.S. government has and has to roll over as well. So that underlying story hasn't changed, which is why I'm still firmly bullish gold. But markets don't go up in a straight line. They always shake out people, and they never make it easy, especially for us that watch it on a daily basis.
Mm-hmm.
Yeah. So there you go. So U.S. earnings, that's for next week. Okay, commodities and FX. So I obviously had a little bit of a yarn about gold and silver, but yeah, have a look at that big bar on URA. So uranium has been the massive runner for the week. So anyone that's been long uranium stocks has done exceedingly well. And one thing I did actually read into is Silex Systems. So Silex have this process where they're using lasers or some sort of technology that's above my pay grade to enrich uranium. So they came out with an announcement, say mid-September, when the stock was trading, call it $4, saying that, looks like we're happy with the process. We're going to test it out, and I think we're going to go commercial. And then they came out with an announcement maybe about a week and a half ago, and saying that they've had a third party test their process. it's been validated. So basically, yeah, you now have a commercial grade enriching process. Yeah, don't want to butcher that one. But so last I looked, Silex was at $10, and apparently, some of the long term stories I've heard from Silex is that story's been 20 years in the making, meaning that it's taken them this long to take a process that was invented, however long ago, quite a while back. But it just shows you the difficulties of, it's one thing inventing something, and it's a totally different ball game making money from it. So it looks like they've gone through that hard slog. They've got something that actually works. So yeah, I'll keep an eye on that company, and any dips in that, I'm probably leaning towards buying it. I've had a look at, I wouldn't call it research. I've had a look through some of the forums and some of the upward sort of price targets. I think Shaw's, they're fairly conservative. It's trading around 10. They're like, oh, $11 price target. Wow, that's a real ballsy call. Some of the, more of the back of the napkin calculations that I've read think it's a 3-bagger or a 4-bagger from here. Mm-hmm. So it'll be interesting to see how that plays out. I would have to actually look into, what, because for me, whenever I look at a stock, I'm like, okay, yeah, you make this claim that it should be worth more, but it's always about, okay, the way I always try and think of it is, okay, that's great. That could be worth 3 times as much in, call it 2 years. But what if you're wrong? Like what will the stock do? Is that price already factored in? And am I willing to take that risk? So that's why I like certain, say, mining stocks. It's like, okay, so, for them to, increase their value, they're going to have to, do this extra drilling, prove out this resource, da-da-da-da-da. But let's just say, they don't hit those. What's the downside risk? And a lot of times, just based on the amount of sort of reserves or resources in the ground, how much cash they have in the bank, I'm willing to take. I know what's an acceptable amount of risk for those types of plays. And the other commodity to watch out for is Bitcoin. So I always use Bitcoin as a measure of, is the market risk on and risk off? I thought Bitcoin was looking, we're back at like 113, looking good. It's actually pulled back a bit, and it's trading around 107 as I type, or as I chat here away on this podcast, and it's not looking great. And I actually went to an independent reserve event, was it Wednesday night, with our newest crypto guru, Finn. And yeah, I was just chatting to some of the longer term traders that I know there. And I just said, well, what do you think about this theory? And I just said that, the instos are in crypto now. And, because we've had so much volatility going forward, I think one of the ways that they can actually squeeze retail out is actually just through boredom, meaning that you've got something that's been historically volatile, so everyone gets FOMO or just jumps in and waiting for the pump, and the instos they're there to make money, and they understand that if they suck the volatility out of this asset class, a lot of people might leave and they just go, oh look, there's no more upside in Bitcoin, and here you go, look, there'll be just paper hands selling their Bitcoins there. So that's one to watch. Anything from your end, Kai, on the commodities, or anything you see?
Not so much in the commodity. I think all the other ones have been pretty quiet. And, in terms of uranium on the stock side, Paladin's actually doing really well. So, for the Aussie miners, you've got a couple of big names that, for a pure play is Paladin, Bannerman, you got Boss, and some of the other smaller explorers. But, Paladin had a massive issue last year with production, and that's why they got pretty punished on that downside move. I think it got down to like $6. So, it was pretty substantial. but it seems like they've overcome that operational issue and is actually looking pretty good. Whereas Boss Energy, it's kind of the reverse, right? And we were
Yeah.
it's such a pain trade because basically they had really good cost of production. They are in production, but again, they over the last 2-3 months they've been revising down guidance on especially their cost, right? So they're basically saying that the cost is much underestimated compared to what they're seeing. So they're spending a bit more money in terms of confirming their reserves and their ability to mine. However, it's interesting because over the last week when they've been reporting their quarterly activities, they've actually hit production targets. Their costs were basically in line. So it's kind of a strange mixed bag with Boss, right?
Yeah. And I always just use the share price as my final arbiter, and that hasn't risen as much as
No.
say the Paladin. So, as you said, like it's a mixed bag. Like they came out and said, "Oh, we got cost blowouts," and the market said, "Oh, what's going on there?" And then now, just on the quarterly, they're like, "Oh, we've actually beaten our worst estimates." So it's like, it's kind of like the US markets where they revise earnings so low that you have to beat. So it feels like that's what's happened there. But either way, the market hasn't rewarded them as much as, say, a Paladin, which is been slow and steady in this regard. So, I will say, because I did that little rant about Silex, they've actually been partnering with Cameco. And so have a look at the Cameco chart. They not all due to the Silex news, but that's actually one that's a uranium stock that's actually at new highs and breaking out. So there you go, one to watch. And what's the next slide? Let's move on. Okay, trade of the week. So drum roll, it's a gold stock. And so this is an ASX Alpha stock. Ballard Mining is the code, BM1. So I sent this out, I believe, on the Tuesday. Now, I actually, I forget the name of the gentleman that I met at the RIU conference. So Ballard Mining is pretty much the gold assets that have been spun off from a lithium company. I think it was called Delta Lithium. And if you have a look at the actual assets, there's they've actually got a resource already there, and it was just been left untouched. So Ballard Mining was spun out. The CEO, the exec that I was chatting to, said, "Look, we've got, I believe it was 20 million in the bank. This is their drilling program. We've already got a mine life of 5 years. What they want to do is extend that out to 10. So it just means that they've already got a mineable asset. Now, it doesn't mean that it's going to definitely turn into a mine, but the key with any company is it's all about developing your resources and reserves. So they've got the money for that. Now, when I did meet him, it was trading maybe around 57 cents, and then it kind of just ran without me. And I already had enough. I mean, when you're on the winning trade, like you can never have enough of a winner. But I was just like, I don't have enough capacity to take on another explorer. So I felt like, oh great, I missed that one. But obviously with the pullback in the gold price, what happened was it actually fell all the way down to 50 cents, and I was like, okay, well look, that's a nice level. It's roughly about 100 million market cap. They still got money in the bank. But what happened was an institution came in with a placement. Now, usually when cap raises are done, it's like, oh, great, here we go again. But the difference this time was that this placement was done at a premium. So it was trading at 50 cents. They did the cap raise at 55 cents, and it was done to one party. So the one party took up $20 million. At the same time, the chairman tipped in $200K of his own money at 55 cents. And so for me, as I said, I always look at risk to reward. If other people are willing to put $20.2 million at a price that you can still purchase at, I think that's a fairly not that every trade goes correctly, but it's like you're following the smart money or the institutional money in this rate. And the thing is, they have an extensive drilling program planned. I think it was like 13 kilometers worth of drilling, which is actually quite a big number. So yeah, so just look for that to we should see some good hopefully some good drill hits fairly soon. I haven't mapped out as to when we should be expecting sort of the next news, but that's the premise behind this trade of the week, and that's Ballard Mining BM1. So.
Yeah, and another one that I wanted to talk about, sorry, unrelated to gold, it's actually CSL, right? Like, I mean, obviously the big, I don't think we covered it earlier on, but, obviously the big one to come out this week was CSL and the downward revision. And, it got absolutely punished. I think it was down like 16% on that day. And then the main thing was because they're going to delay the spin-off of the vaccine division, which hasn't done very well. But I mean, at these prices, surely that's an opportunity, right?
Okay, well, but the thing was for me, when I saw that, it was like, vaccine sales aren't going well, and look, I don't want to be raise up the back in the COVID days, but yeah, aren't we all sort of wary of vaccines now? So so it's like you're in a business where you're pretty much pushing I want to use a different phrase, but yeah, you're tasked with something difficult there. But yeah, obviously it's been a blue chip. We actually just chatted to a gentleman who's made a lot of money from holding CSL for a very long time, right, Kai?
Yeah.
So yeah,
but I think that plasma division it's performing as expected, So I think given the market reaction over the last 2 months, I think from a pricing, I agree with you. I think the trend in vaccine in the US is definitely trending down, and it's definitely a rough period. But I just think given the size of the main business unit, which is based on plasma. It's still growing and it's still doing all right. I think just given the share price reaction, it's a bit of a overcorrection.
Okay, well, I'm just bringing up the CSL chart there now. There you go. Hopefully, can we see that? 1 sec. No, we can't see that. Okay. I was trying to be fancy with my with my screen sharing, but actually, I will do it now. Just hold on a sec. So share something else.
It's a big four.
Here we go. Ooh. Yeah, so obviously it was trading 270 then that first news came out. And then we had this recovery here. I remember this point here was when Trump came out and said, they were talking about generics.
Yeah.
And it wasn't that bad, so it's recovered there. And then obviously this is the most recent news. So, yeah, there you go. That's, as a trader, I'd be like, why don't we just sell puts on this thing? But unfortunately, the vol is so low on it, So, So yeah, unfortunately, that's it there. But anyway, I'll go back. So that's my little adventure into. Hang on. Bring the call back here.
I think if you don't have CSL, it's a pretty good time to buy if you're holding for the long term. From a valuation standpoint, I just thought that was a good, interesting one this week.
Yeah. Okay. Cool. Space. Oh, well, let's move on to the next slide. CNN Fear and Greed. So this is actually kind of surprising for me. It was actually. I think more fearful 2 weeks ago. But have a look at, so to the right, stock price breadth. So that's actually showing extreme fear. And the reason why I want to sort of highlight that is, everyone's talking about, oh, wow, this market's doing really, really well. But it's all about once you pop the hood and look what's under there, as I was saying, it's a K-shaped economy. You've got the one set of stocks, anything AI related, obviously killing it. everything else doing fairly average, and that's why the stock price breadth is showing extreme fear. Interesting that put and calls showing greed. So the derivatives traders are still playing the upside. Market volatility neutral. So the VIX isn't saying anything there. So yeah, interesting. So that's the CNN Fear and Greed Index. Do we have another slide? Oh, here we go. So do you want to sell your product there, Kai?
Yes. So we've basically released Mosaic. And what it is our in-house platform that we've built from ground up. And it's a great way to actually get
I love how you say, sorry to interrupt, I love how you say we. You should say I. Because Mark and I had nothing to do with it. And we even had an offshore dev team, and they didn't help out either. So let's just say this is Kai's baby, and it's a great product, and just all hats to how good Kai is at his job. So sorry to interrupt.
No. Me and my artificial brain. No, it certainly wouldn't have been possible without AI. This would have probably been a 6 month and 9 month project. But obviously with the tools that we have available now, and it just shows you, like there's a lot of great utility with a 1-person team. You can build something that's a 4 or 5 man team, what they used to do, right? So, but the platform, it's the purpose, the reason why we built the platform is to service all our existing clients as well as new clients. You can see your holdings on there. You can get all the up-to-date information. So whether it's the podcast that you're listening to now, or any of the other interviews and interesting segments that we put online, it's all on one platform. And basically, you can find it at mosaic.mpc.com.au. There is a free trial available. Just give us a call, and one of us will sign you up for the free trial. And you can start using the platform.
Okay, great. Well, and also, so this is just the first iteration of Mosaic, but our sort of plan going forward is that if you are on, say, Global Alpha or ASX Alpha, and you get a notification on your app, you can just click yes, and then we'll actually execute the order for you. So it won't be actually, that won't be the official thing on this version, but that's kind of where we're heading. And the reason why we want to do that is we want to, obviously service as many clients as possible at a level that, makes it worthwhile and value for the clients. And so what we will, our sort of vision is that, we'll write up the trade rec. We'll actually record a video explaining it, so that, you can actually just listen to the video. And then if you like that pitch, or it makes sense to you, you can actually just click yes there. And so what that means is that, because with traditional broking, I would have to call up everyone and say, hey, look, I like Ballard Mining. This is why I've done it, and I've done that little spiel, how I talk to the CEO. And then, it's up to you, yes or no. But now, we can actually service a lot more clients and obviously get that, great advice out there. So that's Mosaic in a nutshell. Sign up for a free trial and, enjoy the service. So with that, I think let's, that's been a good little wrap for the week. Are you bullish or bearish for next week, Kai?
Oh, yeah, this is an interesting one. I really do think we're at an inflection point, right? Because if we come out of this stronger, what is to stop this market? I just can't find a reason. My heart says bearish. If you asked me to choose one, I would say bearish. But yeah, it's I'm not super high conviction on that.
Okay, so you're a bear, like a 1-star bear.
One-star bear.
1-star bear. So that's 1 out of 5. Okay,
yeah.
just to clarify. Okay, and with that, I'm going to go a low conviction bull. So I'm a momentum guy. This thing just and just to clarify, we're talking the S&P 500. So week in, week out, we're just like, okay, what's the Thursday close? Where is it for next week? I am not high conviction in either direction, but we've been heading higher, so I'm a 1-star bull for this time next week. So with that, thank you for listening, everyone on NPC. Maybe next week, Gars will get off his boat and come and have a chat to you guys. But otherwise, thank you for listening.
Thank you, guys.
Bye.